Welcome to our Forex and CFD market focus video for Wednesday, September 11, 2013. Let's go ahead and take a look at what happened earlier today on our calendar and see what is in front of us. Earlier today we had some consumer confidence data come out in Australia. In a minute, we'll see that the confidence data came in stronger than expected. However, the Australian dollar did not rally on the better numbers. We had some comments from Bank of Japan Policy Board member Ishida. Ishida essentially said that the Japanese economy will be able to withstand a projected increase in the sales tax, and also said the Bank of Japan will not necessarily expand monetary policy if a new sales tax is enacted. He also said he expects consumer prices to increase, led by energy price increases. We saw German consumer price index data come out today. It came in around 1.5% on a harmonized basis, or 1.6% on a harmonized basis, and 1.5% on the headline level. That is, of course, far below the ECB's 2.0% ceiling target for inflation. Nonetheless, of course, the Bundesbank and the Germans will argue that the ECB should leave room to increase monetary policy in case, and interest rates in case inflation does creep up closer to the 2.0% level. We saw quite a bit of claimant data here in the UK today. You can see that the claimant change was actually better than expected, and the claimant count rate ticked lower to 4.2%. Surprisingly, however, the weekly earnings data came in a little bit lighter than expected in some cases. ILO unemployment came in at 7.7%. Of course, the Bank of England has indicated recently that it will probably not raise interest rates until the UK unemployment rate is down around 7.0%. So we probably still have at least a couple years to go before this happens. We really don't see much on the calendar here in the US today. We do see some wholesale trade data and inventories data out later. And then, of course, we'll start getting our weekly gasoline and distillates information supplies. Let's go ahead and take a look at what happened in some charts here in the FX markets earlier today. This is a daily chart of our US dollar activity index. We can see the dollar is below water composite across the board. Here in the euro, we can see the euro is also water on a composite basis across the board. Earlier today, we had remarks from European Union member Barroso, who said he is not ruling out further problems with the debt crisis in the Eurozone, but he did indicate that Greece and Cyprus have made some positive moves forward. Looking at the Japanese yen was much stronger on an intraday basis. It has since given back some intraday gains, but it is on the positive above the blue horizontal zero line here on a net basis. The British pound, of course, is stronger today against many different currencies, and that's why it's on the positive level here. We just spoke about some better than expected employment and labor data in the UK. Tomorrow in the UK, we're going to have remarks from some Bank of England MPC members, including Governor Carney. The markets will pay very close attention there to see if they yield any further clues about the likely trajectory of UK interest rate policy. Here in the Swiss franc, we see the Swiss franc is right around the zero level. Not too much direction or trend there with the Swiss franc across the board today. Moving over to the Australian dollar, we can see, of course, that it is below the zero line here. We can see in recent sessions the Australian dollar has been quite strong against other currencies. We can view this as perhaps a risk-off trade because we had better than expected UK confidence data today, and also UBS and Deutsche Bank, two large FX banks, upgraded their assessment for Chinese GDP through the end of the year. Normally that would be Australian dollar positive, but of course the Australian dollar is underwater today. Let's go ahead and look at the Canadian dollar here. The Canadian dollar is very strong today, is continuing its uptrend that we've seen for the past 3 or 4 days. That is a marked contrast to recent weakness here in the Canadian dollar, as we've seen. Again, this is a weekly chart. And of course, we have here the New Zealand dollar. It is below the zero horizontal line, which means it has a downward trajectory across the board today. Let's go ahead and briefly take a look at some of our other asset classes. This is the chart of gold. Gold, as we see, continues to be in a downtrend. Up here, we of course saw gold trading quite at a high level, right around the 1433 area. It's now about $70 lower. It's trading around 1363 and is at its weakest level since August 21st or so, which is actually the date when the chemical weapons attack took place in Syria. Looking at silver, it's much the same story. Silver over here briefly traded up above 25.10 in late August, and of course it has since receded down to the 23.02 level where it is trading now. In fact, earlier today we saw it as low as 22.76. Looking at the energy complex, we have Brent futures here. We can see Brent futures have sold off the past couple days, but today they have moved higher and traded as high as the 111 handle before moving back below the 111 handle. And moving over to West Texas Intermediate, we see the downward trend has been reversed today. We see West Texas Intermediate futures trading as high as 107.26, and now they are trading just below the 107 figure. Let's go ahead and move back and look at some cross rates that we want to focus on today. This is actually the US dollar against the Japanese yen. This is a daily chart. The chart looks kind of busy, and that's intentional. We see, of course, the dollar is moving right around some Fibonacci extension levels. This blue level here comes in right at around 100.22, which is right around where we're presently trading. And this purple level here comes in right around 100.40. The dollar is going to try and establish a base right around this 99.92 area, and if it can do so, we would expect a move higher to target the 101.26, 101.38 level, which again represents some Fibonacci retracement and Fibonacci extension points. Past couple of days we've looked at this cross rate, and it bears repeating again. It's not one that many traders look at regularly. This is the British pound against the New Zealand dollar. Again, it is not necessarily one that you're going to see a lot, but we can again see that the intraday high corresponds to this right around this 196.12 area. The market got a little bit above that today. And the intraday low, of course, is above this 194.68 area. This is basically the same trade we've seen over the last 3 days. So the sterling Kiwi cross here, as we call it, is hemmed in between these support and resistance lines. A break higher, we would expect a test of this horizontal blue level, which comes in right around 197.90. Here we have a chart of the daily chart of the euro against the Australian dollar. We can see that the intraday high here is right around this Fibonacci retracement level, coming in at 143.08. Any further downward trajectory on this cross rate, we would expect a test perhaps of this 141.38 area. That would be our next downside target. Looking here at the Australian dollar, US dollar, we can see interestingly that the Australian dollar's intraday low came in right around a downtrend line that we had drawn from June 2013. So clearly the market was unable to take the Australian dollar any lower there today. And the blue Fibonacci extensions levels indicate some upward resistance areas that the Aussie may want to test. We look at those at 93.37 and finally at 94.77. So any further strength, and we would anticipate some resistance right around these areas. Let's go ahead finally and take a look at the euro against the Canadian dollar. We have seen that the 137.55 area has been toppish since roughly last Friday or so. It was certainly toppish yesterday and on Monday. Today we see that the euro was unable to get above, much too far above this 137.30 area. That corresponds to Fibonacci extension level. We see that our next downside target here appears to be this 136.92 area, which is this red horizontal line here. And any further move downward, we would expect a test of the 136.37 area, and possibly a test of this area down here, which comes in right around 135.90. We thank you for watching our Forex and CFD market focus video today.